Julia. Iluka, we were talking about this one just with Peter Resho, actually. You know, I suppose a lot of it comes down to your time horizon as an investor, right? Given the cyclical nature of what they're involved in.
Well, at the moment, a lot of Iluka's markets are driven by China, so we're watching Chinese demand very closely. But Iluka's one of the worst performers on the market today, down by 5.9%. And it's really been hit by two things which are interrelated. One, that demand has been soft for mineral sands. And number two, we've seen prices fall because we have seen soft demand. In particular, the zircon market has been quite weak in 2012. And I guess in the face of weak demand, what Iluka has tried to do this year is to remain relatively firm in terms of pricing, and that's really impacted in terms of market share. In terms of zircon, we've seen that market being hit by two things. One, subdued investor consumer confidence really emanating out of China, and number two, because of relatively high prices, we've seen a substitution effect. So zircon, which goes into things like tiles, we've seen a substitution with things like porcelain or a higher content of porcelain in tiles instead. So we've seen some changes in the marketplace. Now, back in July, this company came out with some forecasts, and Iluka now saying that its 2012 production will be on the lower end of forecasts, or indeed below those forecasts that we saw in July. So off the back of this announcement this morning, it does look like investment houses are going to have to adjust their targets for this stock downwards. We have a look at what they were forecasting back in July. Zircon, they were forecasting 200,000 tonnes to 300,000 tonnes. They're now saying it's likely to come on the lower end of expectations at 200,000. For rutile production, they were predicting 140,000 to 200,000. Now they're predicting 100,000, so that's substantially below the forecast. And for synthetic rutile, they were forecasting 170,000 to 220,000. They're now saying 170,000 tonnes for the year. So it does look like production forecast for the year will be adjusted downwards by most investment houses. Not only that, we've seen prices substantially falling. If we compare the pricing for October, November, compared to the first half of the year, well, for zircon, we've seen prices falling by 24%. For rutile, we've seen prices down by 21%. And for synthetic rutile, we've seen prices falling by 34%. Not only that, we're likely to continue to see softness in these markets over the next 6 months. We've already seen some brokers come out to adjust their forecast, and unfortunately it hasn't been pretty today. We've seen Deutsche Bank cutting to a sell with a $7.55 target, and we've seen Macquarie keeping their underperform with a $6.50 target. And considering that Iluka shares have fallen substantially today but are still trading around the $8.12 mark, you can see that the brokers are forecasting further weakness in Iluka shares. So Iluka coming out with an announcement this morning talking about the softness in the market, readjusting the production forecast for the 2012 calendar year, and also talking about the softer pricing. So the shares down by around about 6% today.
Yeah, and Julie, they are the second worst performer on the ASX 200 as we speak. On the flip side, though, you've got your eye on Fairfax Media, fifth best performer on the market today. It's up more than 3%. Now, what's behind that stock continuing to rise?
Well, Fairfax is up by 3.1%, and it's doing quite well. It's trading at around about that 50-cent mark. And I think in the last month, what we've seen is a bit of a change in sentiment around Fairfax, and that's being driven by two key things. Number one, we've seen short positions decreasing in the stock, and that's had a positive impact on pricing. And number two, we've seen brokers becoming more positive on the stock. We have a look at short positions. We know that all year Fairfax has been one of the most shorted stocks on the market. In fact, in the last ASIC report, it was the number 5 most shorted stock, with 11.9% of its stock shorted. And that's quite similar to the beginning of the year. In January, we saw about 11.8% of short positions in this stock. But by the end of June, what we had seen were that short positions had been building. And in fact, 13.7% of the stock was actually shorted. And by mid-November, which wasn't too long ago, we actually saw about 16.5% of positions in this stock being shorted. So a huge amount by mid-November. But since mid-November, we've seen shorts decreasing from 16.5% to 11.9%. And of course, that's had a positive impact on pricing. Since mid-November, we've seen Fairfax shares up by 25%. So if we have a look at the last 30 days of trade in Fairfax, this is what it looks like. 16.5% of shorts at this point in time. and where we are now, about 11.9% of shorts. And you can see as the short positions have been decreasing, what we have seen is the price increasing by 25% in that short period of time. Not only that, brokers are becoming increasingly positive around Fairfax. We've seen a CBA coming out today with an overweight rating on the stock and a target price of 59 cents. UBS has a buy rating with a 60-cent target, and of course the shares are trading around that 50-cent mark at the moment. So the fact that we are seeing short positions declining in Fairfax and we're seeing brokers becoming more positive on the stock has been great news for Fairfax shares over the last month. We've seen a rise of about 25%.
Well, those